Well, hello everyone, and welcome to today's webinar, where we will be looking at M&A activity in emerging Europe during the most recent year. My name is Brian Mulligan, and I am the Chief Marketing Officer at ISI Emerging Markets Group. Today's webinar will be presented by Stefan Stoyanov, who is head of the EMIS M&A database, and also three corporate M&A partners from CMS. We have with us Tatiana Dovgan, who is based in Kiev, Horea Popescu, who is based in Romania, and also Alexander Rakosi, who is in Vienna. So I'd like to thank you all for joining us today. It's really great to see so many people from different countries in the room. And as I said, today we're going to center the discussion around M&A activity in emerging Europe. At EMS, together with our partners CMS, last week we launched our latest edition of the annual Emerging Europe M&A report. And we will present a selection of the latest M&A statistics for the region, and then we will continue into discussion, sharing our observations on current market trends. Now, before we get started, for some of you who may not be familiar with what we do at ISI, we've been in the business of providing information on emerging markets for over 25 years. EMIS is part of ISI and specializes in providing insights on companies and industry sectors for the world's growth markets, and Central and Eastern Europe being just one of the regions we cover. The deal data from the recently published report is derived from the DealWatch database, which is just one element of the EMIS service, which is relied upon by corporate strategists and investment professionals and advisors all over the world. Our partner for today's event, CMS, is one of the largest international law firms with over 8,000 lawyers based across 77 offices globally. And CMS has an unmatched coverage of Central and Eastern Europe and is home to one of the region's busiest M&A practices. And I'm pleased to say that we've been producing this M&A report together with CMS for 11 years now. Just a couple of things before we start. You'll see in the handout section that there are a couple of documents there that you may want to download. The first being the Emerging Europe M&A report that I've just spoken about. That's the full report, so if you haven't already got that, you can get it from the handout section. And also the slides from today's presentation are there as well. Now, during today's webinar, you will be able to ask questions of our presenters, but we can't hear you. So if you want to submit your question, please do so in writing using the question panel on your right. And at the end of the webinar, we will try to get to as many questions as possible. And at the end of the webinar, as you leave, there'll be a very brief survey, which we would really like you to complete if you could, just to provide some feedback on today's webinar. So without further ado, I'm going to hand over to Stefan, who's going to set the scene for our discussion with some overview of the main statistics from the report. Okay, Stefan, over to you.
Thank you, Brian. I think before we set the scene, it's first important to familiarize the audience with our data collection methodology. So if you may, Brian, flip to the first slide. So we call Emerging Europe, the region that you see on the screen, includes 22 countries from Czech Republic and Hungary to the west, all the way to Russia and Turkey to the east. In collecting the data, we have looked at deals that were announced in 2021. The initial announcement date is our key criteria for the time period. So basically, any deals that were announced in 2020 but completed in 2021 would not be included. In terms of deal size, we cover all deals that are at least for 2% equity stake and at least for 1 million euros in value. We also cover deals for separate assets, for example, separate business units of the company, like a manufacturing division, or let's say large credits division of a bank, etc. We also cover deals with commercial properties, for example, offices, warehouses, hotels, and etc., where the minimal deal value should be at least 5 million euros. In terms of the domicile of the target companies, they might have a foreign headquarters, but we're looking for a large part of their business or assets to be actually located in the emerging Europe region in order for this to be included in the data. In the report and our data, we are not covering deal rumors or ECM deals. Actually, we have a separate section on IPOs only. We don't cover any deals for convertible issues or buybacks, non-performing loans, internal restructurings, JVs, or greenfield. And with that said, Brian, please next slide. Let's look at how the region performed overall. So 2021 was a pretty good year for M&A. We see strong recovery after COVID. Deal activity rebounded by 18%, reaching 2015 deals, while the aggregated value of deals jumped by 55% compared to last year and reached 94.3 billion. It's actually the highest annual value we've seen since 2013. What's also very impressive is that starting with the last quarter of 2020, throughout 2021, the latest 5 quarters have all reached total deal value of more than 20 billion. We hope that this trend continues into Q1 of this year. In terms of deal sizes, there were quite a lot of mega deals last year. Actually, 15 deals exceeded 1 billion euros, and you see the largest of them listed here. And the largest deal was actually the acquisition of security software developer Avast in Czech Republic by Norton from the USA. Then we had acquisition of Tive Group in Russia by Sibur Holding. 5% in Vostok Coil were bought by a foreign consortium. Then Allianz from Germany bought Polish insurer Aviva. And then Singapore Sovereign Wealth Fund JIC bought 30% in a Czech telecoms infrastructure company for an estimated amount of 2 billion. Now let's move to sectors. So here on the charts, we have only shown the most active and largest sectors of all. Unsurprisingly, for yet another year, telecoms and IT has cemented its position as the busiest sector in emerging Europe. We had registered 450 deals from this sector in 2021, which is a significant increase of some 120 deals compared to last year. Telecoms and IT was also the leading sector by total value of deals, almost doubling on 2020's numbers and reaching 23.4 billion euros. 5 of the top 10 deals in the region were actually from this sector, including very big transactions, both for software companies and for telecoms. Another hotspot was energy and utilities. It had 123 deals in total, that is 50 more compared to 2020. And particularly in the renewable energy subsector, the number of transactions almost doubled, reaching 81, and their aggregated value more than quadrupled, reaching 1.65 billion. So out of the total deal value for the energy and utilities sector, half of it is attributable to renewables, and about 2/3 of all deals are attributable to renewables. Next slide, please, Brian. In terms of per country activity, here on the slide, you see the biggest winners in 2021. Croatia saw the biggest increases in both deal flow and in terms of deal value. So deals there reached 69. Which is a 61% increase to the previous year, while the total amount of transactions reached 1.9 billion euros, which is approximately a 5-time increase to 2020. Out of the 10 largest deals in the country, 4 were above the 100 million euro mark. And the largest deal was the acquisition of Fortenova, which is a company that has operations across many countries from the region, and we estimate its operations in Croatia to be worth around 500 million euros. Next was Ukraine, where deal volume and value returned to their pre-pandemic levels, similar to what we saw in 2019. 143 transactions for nearly double last year's value, reaching 1.72 billion. Again, if I remember correctly, there were 4 deals exceeding 100 million euros, the largest of which was a cement deal for 300 million euros. In Romania, deal flow reached an all-time record based on our data at 195 transactions, which is 43% up compared to last year, while deal value remained comparable to 2020, largely thanks to a very big deal in which Romgaz bought the share of ExxonMobil in the Neptune oil block. And that transaction is estimated to be worth more than 900 million euros. Lastly, Hungary saw an increase in activity to 59 transactions, whose total value was also slightly up, reaching 1.1 billion euros. The top deal in the country was a local one, which had 4iG acquiring Digi for an amount of 625 million euros. Next slide, please, Brian. Now, before we look at private equity activity, it's first important to note that here in the data, we include both new investments and also exits. So basically included are all transactions that involve some sort of private equity player on either side of the deal. And also, we are not looking only at traditional private equity funds, but also large financial investors who were acting in the transactions through their own private equity arms or vehicles. So basically, the direct buyer might not necessarily be a traditional private equity fund, but it acted in the deal to a PE vehicle. Private equity in emerging Europe has been on the rise, and over the last year, it reached 399 transactions, which is a 25% increase compared to 2020. The total value of deals reached 23.8 billion euros. But most remarkably was that over the last year, in fact, every 5th deal in the region had some private equity involvement. So now deals with PE involvement account for about 20% of all in the region. Not surprisingly, telecoms and IT and real estate were the leading sectors in terms of activity, basically by number of targets acquired. And then in terms of largest investments, the largest deal was the purchase of 30% in Cetin in Czech Republic by Singapore Sovereign Wealth Fund. There was also a very big deal in Russia where a local company, Kismet Capital, bought a software developer called Nexters for 1.6 billion euros. And then a consortium led by General Atlantic and SoftBank invested for 9% in Turkish online retailer Trendyol, a deal worth 1.3 billion. Next slide, please, Brian. In terms of IPOs, 2021 was a remarkable year, a bumper year for new listings. The number of new flotations increased more than 4 times, from 26 to 116. Really impressive. And the total amount raised nearly tripled, with 13.5 billion euros raised in IPOs. Istanbul, Bucharest, and Warsaw continued to be the region's hottest hubs for IPOs, while companies looking to attract foreign capital preferred to list their shares on international exchanges like London, Amsterdam, and New York. And then The biggest 4 listings in 2021 included Polish parcel delivery company InPost, which listed in Amsterdam. A Russian discount retailer Fixed Price Group had a dual listing in London and in Moscow. Czech real estate investor CTP also listed in Amsterdam. And then I think it was again a Czech company, Pepco, also headquartered in the Netherlands, listed in Warsaw, raising 825 million euros. And I believe that concludes the data part of this webinar. Of course, there's much more detail in the report, going much deeply in all the countries that we cover and in all the sectors. Oh, Brian, I think you're on mute.
Sorry, yeah. Classic on mute again. I'm sorry about that. Yeah, thank you very much, Stefan, for setting the scene with the numbers, and it sets the scene nicely for the next part of the webinar, which is our discussion around particular topics that are perhaps driving some of these statistics. And we're going to start off, we're going to bring in our colleagues from CMS here. And the first kind of topic for discussion is really what were the main drivers for deals activity in 2021. And perhaps if we can start off, and the question really, I guess, is, there's been a lot said about the impact of COVID and the associated measures with the pandemic on negative impact on deal activity. But what are the other big themes that have been driving deals in 2021? Perhaps I can hand over firstly to Alex, maybe to comment.
Yes, thanks a lot, Brian. Can you hear me okay? Just so that
yep.
I make sure this is working. Okay, excellent. Yeah, I mean, generally speaking, we've had as a report showed, a very, very active and sort of busy year. And undoubtedly, COVID is still sort of on people's minds, and it has affected the whole deal landscape. That being said, I think we've entered somewhat of a new normal in the sense that, transactional parties are more used to dealing with the effects on COVID, not just sort of from a business perspective, but also how deals are run, how deals can be executed and successfully completed. So in a sense, I think there's gotten to be somewhat of an familiarity with the situation. And while it, of course, affects the various sectors in a sort of different way, I think M&A activity in itself has been quite active. I mean, one thing that we sort of see across the board is the topic of ESG that, of course, has come to be sort of a very hyped and much talked about topic in various sort of sectors, both for the strategic side, both for financial investors, in sort of their overall investing and lending environment. They're seeing this as a sort of a tool to create more value. Suppliers and contractual counterparties have sort of put a higher onus on the whole thing. So it inevitably also feeds through in terms of what transactional parties are looking for when they assess their targets, when they sort of make their valuations, and that sort of, as we see in all the jurisdictions that we're covering, it's sort of an overarching trend in the deal landscape. At the same time, we have sort of valuation gaps, and low valuations in certain sectors have led to increased activity. So we believe there's sort of a multitude of factors that have led to a very active M&A market, as we've witnessed in the past year, and as we think it will continue. And I guess we'll get to PE in a second, but in essence, those are some of the real driving factors that we're experiencing in our daily practice. Maybe to shift gears and maybe talk about the specific sectors, Horea, maybe you can share your views on how ESG has had an impact on energy in its recent deal flow.
Thank you, Alex. Well, as you could all see from Stefan's presentation, renewables has been a very hot sector in the last year or couple of years, actually. And we saw that the deal value, while the deal values increased, the deal numbers increased significantly. This is because you know, we are not just selling existing projects, but you know, investors are putting their money into new projects and new development. And one of the main drivers for that is, of course, the ESG policies that are implemented more and more at the level of investors and at the level of you know, the general regulation, and you know, this is becoming a driver in developing new capacities in conjunction, of course, with decarbonization and you know, other global trends. You know, there are some obvious reasons why ESG is critical. First, there we see new funding available on the market, green funding that is also helping you know, developers put on in production the new capacities. We also see new big investors driven by commitments and ESG policies investing into renewables, and we have seen this trend over the last couple of years as increasing every month, I could say. And we see big companies, tech companies, again, with existing ESG commitments that are looking to invest directly or acquire energy directly from renewable sources, with more power purchase agreements being put into the market. So, you know, there's a whole scene of you know, arguments for why ESG is critical, and I can only see this trend continuing. But you know, renewables are being built, and energy is important, not just because of ESG, but for other reasons as well. Maybe Tanya, if you want to comment on that.
Yes, thank you, Horia. Hi everyone. So indeed, renewable energy is really a hot sector, and we can see this based on our experience at CMS at the regional level as well. And as my colleagues have said, it's driven by a number of factors. And in addition to those that Horia has mentioned, ESG, increased availability of financing, energy transition triggers, there are quite a few other ones. And given the importance of the renewable energy subsector, I'd like to say a few things about this. In the first place, I think that by now, renewables are considered to be pretty well established in terms of the quality and the performance of them in the long-term perspective. Not just the hardware itself, but also the infrastructure and technologies that are being used. This boosts the attractiveness of the renewables overall. That obviously digitalization is happening everywhere, and energy sector and renewables are not an exception. And we do see an increased activity in AI, and also various innovative technologies to automate processes, boost the plant's performance, etc. And but perhaps one of the key factors that's driving investments in renewables is because the natural gas prices have risen sharply around the globe in recent times, and this has obviously been due to a combination of factors: high demand, low inventories, tighter supplies from some certain suppliers, including Russia. All of these factors make companies look further into renewable opportunities, in particular solar and wind. And amongst our clients, we did see a healthy level of activity in 2021, in particular with investments in solar and wind. And with abundance of various other opportunities in the region, we do hope that the activity levels in renewables will be equally strong, if not stronger, in 2022. And amongst the clients that we do see in the region, it's the French Total company investing in solar and wind projects across various countries. Then it's a number of Scandinavian investors, including Scatec Solar, who are very active in the region. And obviously the sector attracts the Middle East investors, including the ones that Stefan has already mentioned. Alex, I suppose these are not the key themes, right? And I suppose that some industries really benefit from consolidation. Would you mind talking about this a little bit?
Do we have Alex?
Alex, I believe you are on mute.
Okay, I'm back on now. Sorry. Thanks, Tanya. So, no, obviously there's various sectors being affected in different ways. We still see a very high level of activity in terms of consolidation in the financial services markets, for example. So we have had and are in the process of sort of a number of bigger banking M&A transactions where either established institutions are trying to further gain market shares in the relevant region. Others may be focusing on their core business a bit more and are trying to sort of tailor their business model more towards a sort of future-facing pandemic-resistant approach. So that inevitably leads to activity in the markets, and both sort of from regional players, but also still international investors looking into the region is, I think, an element of M&A activity that we'll be continuing to see in sort of the near and medium term future. And then obviously there are sectors such as recycling, for example, and packaging, which have been somewhat of a beneficiaries of the pandemic. We've witnessed actually quite a lot of interesting transactions in that field, and that goes both for financial sponsors and private equity as well as corporates. Various parties need to cater to new legislative efforts either being put into place or having been put into place. So recycling, again, going back to what a sustainability and circular economy means to certain industries, is something that we'll see as a quite active and driving force. And then sort of the ripple effect of the pandemic, I mean, distressed M&A is something that we're expecting to also increase. I think at this point, the wave has not fully manifested itself simply because there have been government support systems, deferred payment programs, debt deferral situations that once those instruments expire, we do think that there will be sort of an additional spike in activity as far as that goes, and parties will be looking to cash in on unfavorable valuations. But I think let's shift gears maybe and look at one of the sectors that, as we've heard from the presentations, are sort of hot right now. TMT certainly is a prime example of that. Horea, do you want to enlighten us in that regard?
Sure, Alex. Thank you. I think it's well, it's kind of pretty obvious that TMT is basically exploding in all these countries. I mean, TMT is such a wide sector that there will always be some some subsectors which will be growing exponentially, while others may continue a more linear trend. However, TMT is now, what was it, Stefan, 1/5 of the overall value, which is huge, and 450 deals, really impressive. But I really think that will continue because obviously, and pandemic may have accelerated this trend, but everyone is going into digitalization. So we see new actors being acquisitive in the market, not just tech companies that would acquire software companies that have a good product. We also see companies like from the old world, like brick and mortar companies that acquire software companies that create a product that they may integrate in their business, so in order to expand and make their business more efficient. And we have seen several transactions in that field where companies you would not have expected for bid at least tens of millions for software development companies. And I think this trend is set to continue. Moreover, also in the software development field, we see an increasing trend, because in countries such as Romania, for instance, software and software development has grown from 1% of GDP to almost 10% of GDP and it's done by what, 2-3% of the employed the population. So it's growing exponentially, and as a result, I think transactions will also grow. We see also and this is creating kind of a positive vibe everywhere with the the creation of university cities as new startup hubs, creating new ideas and new companies. we see venture capital flourishing now, with millionaires from the previous tech deals staying in the countries, investing in these new startups, and creating this environment that helps create new ideas. So I think overall there's quite a positive vibe about this sector. But besides the software development sector, we data centers as a new potential trend for transactions, and I can see that developing over the next years, as well as the existing larger deals in the telecom sector. And one deal in the telecom sector may be half of the transaction value in a certain country. But maybe enough about this. Tanya, would you like to add something on this sector?
Just hurry, before we pass it to Tanya, we actually had a live question coming from the audience to explain what we refer to by TMT. Just for the audience, this is telecoms media technology. In the report, we simply call it telecoms and IT, believe, but it's the same thing. So telecoms media technology. Over to you, Tanya.
Yeah, thanks, Stefan. Yeah, thanks for passing over, Horia. Yes, given that this is such a broad sector, there is not enough to be talked about. The key theme that we're seeing in TMT, apart from the abundant activity in IT sector, which Horia has mentioned, is a transformation of telecom companies in IT companies into cloud-based service companies, and it's really is ongoing, especially in this year, and we're seeing a very hot start in 2022 as well. The companies are spinning off high-value assets, which really allows them to bring in new investors who really want to focus on predictable cash flows of infrastructure units. And telecom companies use this funding to focus on upgrades of 5G, cloud, fiber, and this actually results in the new types of M&A activities in the market, such as the carve-out, so-called the carve-out of infrastructure assets, such as tower, cable, and fiber. And this transformation is only gaining traction in CEE. It's not as abundant as it is in Western Europe, for example, but as Stefan has mentioned as part of the presentation, we already seen some deals in Poland, like the sale of tower infrastructure, Polkomtel, and we're seeing a sale of stake in Ceton to Singapore Investment Fund. That's a Czech Republic infrastructure group. So we do expect that this trend will continue in 2022. And as Horia has mentioned, data centers is another very hot topic for CEE, driven by the rapid rise in digital services, which has led to really increasingly important demand for data centers. And that's where the CEE region has a lot to offer, because it has a very strong reputation in this area and essentially great potential to be a region of preferred choice for clients. Some of the global tech companies and financial sector companies are already there, in emerging Europe. They have already located some hubs, including Poland, Bulgaria, Czech Republic. Some major companies have recently announced their plans to do so in the nearest several years, including Amazon. And if you wondered what makes CEE so attractive, then there are several key factors. In the first place, that's a skilled labor at moderately low to medium cost. Then obviously what's much needed is a secured and well-developed digital infrastructure backed up by reliable energy. Obviously, there are some gaps in rural places, but those are expected to be fixed, in the near future. And the trick for a successful data center is a supportive national government and the range of tax incentives which some countries in the CEE can offer. And finally, last but not least, it's the low construction costs, availability of land, low land prices, which also increases opportunities for development in the real estate sector. And maybe just a few words about the classic conventional telecom deals. We still see some activity in traditional telecom M&A. Normally, these are the high value deals that make up the stats. in particular in Ukraine in recent years, and in the last year in particular, we've seen several acquisitions, major acquisitions by the strategic investors, and this activity is primarily driven by further consolidation, which Alex has mentioned. In the telecom industry, it's mobile to mobile, fixed to mobile, but if we take a look at the stats, we can see that those traditional telecom deals are completely outnumbered by the number of IT deals and the carve-outs in telecom infra. We do expect to see some further consolidations in the region in 2022, and in the absence of any adverse regulatory changes or potential competition concerns, such activity levels are not expected to be decreased. So overall, the telecom and IT, given the overall trends and themes, is definitely primed for another very successful year. Fingers crossed for that. Over to you, Brian.
Thank you. Thanks, Tanya. I think we're going to talk about private equity now. So, Alex, in terms of what steps are financial investors likely to focus on in the near future, in your view?
Well, I think we've got a pretty good menu in terms of PE activity in the past year, and as we expect this to continue. I mean, obviously, PE funds have still a lot of dry powder to deploy, and they're looking to do so in a variety of sectors. I think, I mean, some of the obvious candidates have been mentioned. I mean, tech and IT and TMT are still very strong and continue to do so. Software is one where, as Tanya has outlined, I think this is a type of industry that historically has been very strong in some of the countries that we're covering, Romania, Bulgaria, Serbia, where sort of the ratio of skilled workforce to cost considerations is very favorable, and scaling of the relevant businesses is sort of a very attractive proposal for the PE investors. Also, compared to some of the sort of Western European countries and the US and the UK, competition for certain assets is still somewhat lower than what PE players may be facing in our region. So that sort of in itself leads to an overall promise of higher upside. So we do see quite a big level of interest, both by regional and international PE funds. It's healthcare that, for obvious reasons, is an industry that has been very strong, and we expect that trend to continue. And I've alluded to it before: industrial, packaging, and recycling are sectors that PE players, I think, have placed a new sort of focus on. In terms of transactional type of activity, we're seeing the usual PE plays, but there's also a renewed focus on minority investments in high value assets. So teaming up with an established majority owner, where sort of the interests align, and PEs, even in a minority position, are able to bring a certain level of sophistication. ESG was mentioned before, but not only that, I think optimization of processes and being able to recalibrate the business in order for the business to take the next stage and then create some real value and growth. So I think this is some of the meta situation that we are seeing, that sort of varies from country to country, of course, but I think in a nutshell, those are some of the more relevant industries as we move along. I mean, maybe to get a bit of the sort of specific regional trends, Horia, what have you been seeing in terms of Romania and its PE activity most recently?
Well, thanks, Alex. I think Romania, at least last year, has been maybe a bit different from the region, meaning that we haven't seen that many big deals going on. However, we have seen quite a lot of small deals or smaller deals, somewhere in the millions or low tens of millions, happening. And probably this is due and were mainly done by more local PE funds making new acquisitions, or their portfolio company expanding in country by making new bolt-on acquisitions. The larger or the regional or the international PE funds have not been that active lately. I mean, in the last year, maybe because they were busy on other countries, or maybe because they just didn't find the targets to their liking. But this goes both ways. There were no major investments or no major exits either last year, but that's kind of building a little bit of pressure on this year and in the coming year. So I would expect larger deals to happen this year and next year as well. What I found interesting was that PE is looking at areas that they probably have not looked at before, like mainstream PE is looking at real estate. It's looking at data centers, which is something relatively new in Romania, maybe, although it was a trend elsewhere in the region. It's even looking at renewables, which again came as a bit of a surprise because there are other funds, investment funds, which are more focused on energy that are looking at renewables. Having said that, as general trends in the region, I think it's fair to say that the local and regional funds have done significantly more deals in terms of number than the big worldwide funds. But then again, the big funds do the high value acquisitions. Therefore, probably the value of the deals are relatively similar, while the volume is very different.
Thanks, Horea. I think one final topic for discussion before we move on to Q&A, questions from the audience. So as Stefan showed at the beginning of the session, we've seen record activity within IPOs. Could we just get the observations of our experts on those?
Yeah, thanks, Brian. Happy to jump in. I mean, as Stefan said, there was really a record number of IPOs in the region, and the surge was really dramatic, from 20-something to 120 or 116 deals, which I mean IPOs, which is really maybe also because 2020 was not the best year, and this is, I think it's a trend that is not simply regional. It's a worldwide trend of booming IPOs, or at least something that has been going on over most of last year. Maybe there was a bit of a slowdown towards the end of the year, but most of the last year was kind of the best year ever, I think, in terms of IPOs in the region. Again, a global trend. And I mean, ground for that was laid maybe a year before. I think we had the Allegro listing, which was a huge one. And then in 2021, we had the InPost listing, which was a surprisingly successful one as well in Amsterdam in terms of value. Of course, we also had the UiPath listing in the US, but it's debatable to say whether that can be related to the region, or is it already a US company, because if we put that also into the mix, then probably the value would be dramatically higher. Some reasons for this boom, I think it's many companies held back in 2020 because of the uncertainties during the pandemic, and they came onto the market in 2021. As I was saying, the global positive trend in IPOs, the global disponibility and availability of liquidity on the stock exchanges, which attracted the national champions to go out on the local markets, mainly Warsaw market or Bucharest market, or to global markets such as Amsterdam or the UK market stock exchange, sorry, or even in the US in some cases, but I think US is rather the exception than the rule for right now for CE companies. As I was saying, there are new unicorns appearing, especially in the tech sector, but not only. There are more companies coming to a certain size where attracting funds from the capital markets is easier and maybe sexier, to put it this way, than just going to normal financing. There's kind of a good mix of arguments for why IPOs were so successful last year. I mean, in Romania we had the 21 IPOs or something like that. Never ever happened on the Romanian stock exchange, and the market cap has grown to over 40 billion euros, which is again maybe doubled the size it was a few years ago. And we can see here a potential further increase in Romania, because we keep talking about a hydroelectrical listing that is due to happen perhaps in the next up to 18 months, which will further increase the market cap in itself by 25-30%. So I think, yeah, there are good arguments for at least some of the markets to perform well, while the general trend may not be that dramatically positive. We saw a bit of a slowdown in the US in the last months or so, and maybe so in Amsterdam and London, which however remained main markets, go-to markets for regional companies or local companies in CE. Tanya, Alex, would you like to add something on that? Maybe Tanya? Private equity has been one of the reasons. Private equity exits have been one of the reasons for IPOs being so successful of late. And maybe you want to comment on how they approach their exits of late.
Yeah, Jorge, I think that what we're seeing recently, well, given that obviously for selling shareholders, valuation is the key in deciding which exit route to follow, and in particular for private equity companies, that's number one issue. And since the IPO has regained strength recently, which is evidenced by fantastic stats, record year for IPOs, and many sellers, in particular private equities, since it's a pretty complex and expensive process, so-called a dual track process, whereby the seller prepares for the auction process, but in parallel with that, prepares for the IPO listing, and towards the advanced stage of the two decides which ultimately which route to take. And the idea behind this obviously is that this process has a great potential of optimizing the exit price, despite the disadvantages such as the complexity and the price. And what we're seeing, what we started to see last year and what we're seeing this year is that we are seeing a lot more so-called dual track processes, and many of those have resulted in ultimately an IPO, which does confirm the strength of the capital markets these days.
And maybe a final note from my end. I think that we've also seen that dual track is now a real and meaningful alternative, and I think that also stems from the fact that sort of PE players are now actually affording an equity and IPO story to some of the businesses. So I think they attribute to them a higher level of sophistication than they may have done in the past. So it becomes easier to also spin the IPO story. Thus, dual track has a real chance in some of these instances. But Ryan?
Great, thank you very much, everyone. That concludes this section where we've been talking about the major topics, and we'll move on quickly now to the final part of the webinar. We have a little bit of time to answer some questions that have been set by our audience. Unfortunately, we don't have a huge amount of time. We'll try and get to as many as possible. The first one is, well, I'll just submit the question. You mentioned that much of M&A activity in the power sector is driven by a desire on behalf of tech players to improve their ESG profile and to source clean energy directly from renewable energy producers. But are there any other trends worth mentioning in the regional energy power market? Perhaps Horea.
Yeah, happy to take that, Brian. Thank you. I mean, I would say two major other trends to be considered. One is, notwithstanding tech companies, wanting to acquire energy from green sources, there's a general trend in all countries for them to create new energy sources, and there are commitments, I think, in each of the countries or in most countries to achieve almost 30% of their energy from renewable sources come 2030 or something like that. Therefore, there is a move which is pushed by local governments in that direction. So there we will see more and more new investment, just that will be, you know, supported by governments as well in order to reach this, you know, this goal. On top of that, I think we see various changes in, you know, production and distribution assets. We have seen, you know, assets changing hands in the last few years, like, you know, the ČEZ exits from the Romanian market, you know, and we see big infra funds coming in like Macquarie. And I think this trend is also set to continue. There may be other players wanting to leave the market. There may be other infra funds wanting to enter. So that would hopefully bring us some new interesting deals on the market in the next couple of years.
Great, thank you, Horea. Question for Tanya. What are the drivers behind the upturn in activity in Ukraine, and do you expect this to continue? What's the profile of buyers in Ukraine currently?
Yeah, thanks, Brian. That's a good question. Well, in Ukraine, we've had probably a fantastic year in terms of M&A. Probably one of the best years since 2016. In my view, this is driven by the fact, in the first place, that Ukraine is one of the largest untapped countries in Europe, with a very large potential, huge potential, and a number of interesting investment opportunities. The country has generally been moving in the right direction in terms of the reforms, yeah, and that has been reflected in the economy growth, yeah. And in terms of the sectors, I would say that the growth in M&A in Ukraine largely follows the kind of CEE and emerging Europe trend. So it's largely driven by telecom and IT. We've had a huge number of IT deals, a few major telecom deals, which I have mentioned. Then since Ukraine is a big agricultural country, we have a number of M&A agri deals. Some of them are still in the pipeline, some are still confidential to mention, but that is certainly a trend for the next couple of years. Then healthcare and pharma, definitely, it's one of the sectors that is hot everywhere in Europe, in emerging Europe, and as well as in Ukraine. And in terms of the profile of the investors, we do see strategic investors from Western Europe. We have a huge interest to Ukraine from the Middle East investors, and especially investors from UAE and Qatar, who have recently invested in quite a number of interesting port infrastructure projects. So the potential for the concessions is still there, the privatizations. There have been several interesting privatizations successfully completed last year, and concessions I've mentioned, yeah, in particular as regards the port infrastructure projects is key. There are investors from the US that recently have shown increased interest in IT sector, and in particular the VC in Ukraine has not been active at all, but in the last year we did see some increased interest for sure. So I do hope that that trend is set to continue in 2022, and which will pick on not only on the interest of private equity to telecom and IT, but also venture capital and corporate venture capital investors. So that's in short.
Thank you. Thanks very much, Tanya. Question I think we'll put to Stefan, and it's on how are valuations on target companies likely to be impacted by the Fed carrying out rate hikes? Will those hikes make early mover and startups more likely to be potential targets?
Yeah, thank you, Brian. As far as listed companies are concerned, I think we already saw the effect of Fed's intention to raise hikes. Pretty much all the stock markets globally declined, but I'll be talking more about private companies, and on one hand about mature companies and then startups on the other. So all things being equal, a rate hike and increase in the interest rates should definitely result in lower valuations, simply because the interest rate is one of the inputs in the most widely accepted company valuation model. So basically the interest rate plugs into the discount rate used for discounting the company's future cash flows and estimating its present price. So all things being equal, upping the discount rate would decrease the valuation of mature companies. Now, the question is how quickly would that happen and to what extent? Because as I already mentioned, the stock market was very quick to react, but the private market, I don't expect much to change over the next 1 year. And then it would also depend on how many rate hikes the Fed actually has in mind, because you know, perhaps a couple or even a 3 this year probably won't do much. But if we are on a course of increasing interest rates, that will definitely have an effect on valuations in the long term for mature companies. Now, for startups, I think it's a little bit different, simply because startups are valued in a different way. And then it also it depends on what stage in their life the startups are. For very early and young companies, I don't think the interest rate would have much an effect, simply because the startup market seems to be pretty booming currently globally. There is very high demand for VC deals, and I think that they will continue to be hot in the long term. So in short, I think the effect of increasing interest rates will probably be more detrimental to mature companies, but not immediately, perhaps after a year, and if the Fed continues on this course.
Thanks, Stefan. So we've got a few minutes left. I think we'll probably have time for 1 or maybe 2 more questions. Perhaps one for Horea. Do you expect this high level of IPOs to continue? And do you expect Amsterdam to overtake London as the most popular listing venue for Central and Eastern European companies?
Well, as a UK-based law firm, I hope not. But what can I say? I mean, I think you know, London is trying to you know, find its own way now after Brexit, and I'm sure they will gain back traction. I think it came a little bit of a surprise for everyone that Amsterdam had this surge in activity, even for our Dutch colleagues, that it had such a surge in activity last year. And definitely Amsterdam is there to stay, and there are, you know, various reasons for why Amsterdam is attractive. It's probably less formalistic, and it's part of the EU now, unlike the UK. So therefore, I'm not sure Amsterdam will necessarily overtake London, but it will remain a good alternative to London in the next years to come. Whether other EU markets will benefit of that, other EU stock exchanges will benefit of that or not, I don't know. But definitely Amsterdam has been an interesting surprise for all of us. As for future IPOs, I'm pretty sure that they will continue. Next year, I'm not sure if this year will be as successful as last year, but definitely it will be a good year.
Thank you very much, Horea. I think we'll have time just to squeeze in one more, and this one's for perhaps Alex. What do you think are the most promising opportunities in Central and Eastern Europe for private equity at the moment?
Well, I think tech remains one that is quite hot, and I think if I had to put my wager on something that is maybe not that much talked about, we've talked about it in this session. I think it's recycling and sort of circular economy type of waste management situations, where we're actually seeing a few situations develop currently. In the recycling space, it is crucial for key players to now sort of accumulate, you know, materials, and not raw materials, but recycled materials. So anyone who wants to be a player in that space needs to have the necessary capacity at its disposals, and PE players are seeking to sort of find their entry into those companies. There aren't that many of them, but there's a good number of very interesting targets that we're currently seeing are either sort of in a stage where they need further capital to develop and or further sophistication to sort of take their level to the next, take their business to the next level. And this is what we feel has a lot of promise as we move forward. And then, of course, the usual high growth type of situations, software, and some TMT carve-outs and sort of recalibrations of the business. So I think those are three sectors that I would expect to be very much talked about in the coming year or so.
Great, thank you very much, Alex. And with that, our hour is up. So it just to say thank you first of all to our panelists for their insight. The hour went by very quickly, and thanks also to our audience for your questions. I'm sorry if we didn't get to your question. Our time is limited today, unfortunately. As we close the webinar, please do make sure that you have downloaded the M&A report if you haven't already done so, and the slides are there also as well if you want to take a look at some of the stats that Stefan provided earlier. As you leave the webinar today, there will be, I mentioned, a brief survey, so please do complete that if you can. If you're interested in finding out more about what we do at EMIS in terms of monitoring M&A activity, both in Central and Eastern Europe or in other parts of the world, please do get in touch with us. We've got a lot to show. But we'll leave it there today. Thank you so much for your participation, and we do hope you enjoy the rest of our day. Stay tuned for further events from EMIS and CMS. Thanks very much and goodbye.
Bye, everyone.
Thanks, everyone. Bye.
Thank you.
Thank you.
Bye-bye.
Bye.